I'm sorry again for the technical glitch. So we were discussing about salary. So this 36,000, out of 36,000, 6,000 is unpaid. So I should show salary 36,000 in the salary column, and I should not show 30,000, because my expense for the year is 36,000. 2 months salary, that is 6,000, is unpaid. That is separate issue. We have not paid it yet, but we will be paying it in the next year or next to next year or whatever. But this amount of 36,000 must be shown in the salary column. For example, if I pay him the salary of next 3 years in advance, so next 3 years salary will be 36,000 into 3, that will give me rupees 1,08,000. If I pay him the salary of next 3 years in advance, and if I write salary rupees 1,08,000, this will totally reduce my profit. Will it reduce my profit or not? So it will totally reduce my profit, but it is not correct actually, because I have paid more expenses this year. Next year I will be paying less expenses, or I don't need to pay the expenses next year. So we should always mention what is due of this year, not what we have paid or received actually. For example, if I have sold goods and I am going to receive money, but I have not received it yet, so will it not be shown in the accounts as I have not received money? No, it will be shown. Although I have not received cash, but I have certainty that I am going to receive such cash. For example, if I have earned some money, I am going to get some income of rupees 5 lakhs from someone, but however I have not received it yet, but I am certain that I will receive it in a future period of time. For example, after 3 months I am going to receive it. In the meantime, the year ends, the accounting year closes, so I should mention that income or not. I have full certainty that I will receive that amount. In that case, I must mention, although I have not received the amount, but I must mention it as an income. So in this way, we must follow accrual basis. We will not follow cash basis. Cash basis is that whatever amount you have paid, you write that. Whatever you have received in cash, actually, you write that. But no, we follow accrual basis in accounting, because if we follow cash basis, it will give us absurd results. It will not give us correct result. So always we follow accrual basis in accounting. We never follow cash basis. So these were the 3 fundamental accounting assumptions that you need to learn or know in a very detailed manner. I have explained you everything. Still, if you have any queries, you can text me personally on WhatsApp. Now we are going to accounting principles. Fundamental accounting assumptions we have learned. Now we will see accounting principles. Although there are more principles, but I am showing you only the 4 most important principles here. Number 1 is business entity concept or dual entity concept. We also call it dual entity concept. So what do you mean by business entity concept? Always remember that owner and business are 2 separate entities. We should never mix owner and business with each other. We should never interchange owner and business with each other. We prepare accounts for the business. We don't prepare accounts for the owner. This is a simple thing to be kept in mind. This principle is to be followed in every organization, that owner and business are separate. For example, if owner invests rupees 1 lakh in the business, or the owner withdraws some amount from the business, if the owner has withdrawn rupees 20,000 from the business, we must keep a record of that. We must enter it into the books of accounts, because we cannot think that owner is himself the owner of the business. He can withdraw any amount, he can invest any amount in the business. We should not make an entry of that, but that is wrong at all. We must make an entry for that. So we should always remember that business and owner are 2 different entities. These are 2 different concepts totally. So these 2 are totally separate and distinct. We should never mix or interchange them. Owner is different, business is different. Next is matching concept. The whole idea behind preparing the accounts is, the first and foremost objective of preparing accounts is to ascertain the correct profit or loss during the year. Whatever profit or loss during the year has been incurred or made during the business, such profits must be ascertained by preparing the accounts. So for preparing the accounts and finding out the profit, what we need to do is, we need to match all the expenses incurred during the year, all the expenses, whether it is direct expense, indirect expense, salary, rent, wages, electricity, postage, courier, refreshment, expenses made on purchase of goods, carriage, conveyance, everything. All the expenses must be added up and matched with the revenues and incomes during the year. If we match all the expenses that we have made during the year with all the incomes and revenues, we'll get the profit. All the expenses added together must be matched with the revenues and incomes of the year to find out the correct actual net profit. or loss during the year. If the income and revenues are more than the expenses, it will be net profit. If the expenses are more than the incomes and revenues of the year, then it is net loss. Next is money measurement concept. About this I want to tell you simple thing. Everything should be measured in terms of money. In accounts we don't have any other unit of measurement except money. Each and everything in accounts must be measured in the terms of money. For example, if I am going to value stock on a certain date, I want to check how much of stock I am having on any given certain date. For example, if I consider the date to be 31st March 2020 or 31st March 2019, or for example today's date, that is 9 July 2020. On 9th of July 2020, what is the stock that I am having in my business if I am going to value that? For example, if I am a rice trader, rice merchant, and I deal in rice, my business is purchasing and selling rice. I have checked my godown and I have found that I have 100 bags of rice today. I have 100 bags of rice in my godown in my business today. So I cannot write it as 100 bags of rice. It is totally meaningless in accounts because 100 bags of rice is no unit of measurement in accounts. Bags of rice cannot be measured and we cannot write bags of rice. So I must write I have this much bags of rice, the value of which is this much. The monetary value of such bags of rice must be written. So always we need to measure each and every item of accounts in monetary terms. Everything should be measured in money. For what? The simple reason here is, if I am writing 100 bags of rice, the value of that rice may change. Value of rice every day fluctuates in the market. So today, if one bag of rice costs rupees 1000, so 100 bags will cost 1 lakh. Tomorrow the price may fall down from rupees 1000 to 900. In that case, 100 bags will cost rupees 90,000 only. So today I have written 100 bags of rice, the actual value of which is 1 lakh in today's market. In tomorrow's terms, the value of which may fall down to rupees 90,000. In that case, this type of price changes are never going to affect my accounts because I am writing only 100 bags of rice. So this is totally meaningless and absurd. We should also not follow this concept. We should always measure each and everything in terms of money. In accounts, always remember, we don't have any other unit of measurement. We always will be using money as only the measurement unit in our accounts. The last thing we have is prudence. Prudence is just to be careful while preparing accounts. Careful in the terms of spending money, recording income, recording expenses. We must always follow prudence. What does it mean? If we have a doubt that we need to suffer this loss 2 years from now, 5 years from now, or 3 years from now, we'll record that loss, or we'll start making provisions and reserves for that. We'll start making some sort of reserve for that, since we have a doubt that we will suffer this loss in near future, or if we are having some sort of doubt in our mind that this amount of loss may be incurred in future, this amount of expenses we might need to pay, so we'll start making provisions and reserves for that. We'll keep a record of that in our books of accounts, even if we have a smallest amount of doubt on that. But while recording income, if we have a doubt we'll receive some amount of income in the next year or in the next 6 months or 3 months, in that case, until and unless we don't get a full amount of surety, until and unless such income or revenue or profit doesn't become certain to be received, if we don't have full certainty of receiving such amount, we cannot record in the business. For a simple thing, the simple reason behind this is, if I have recorded that I will receive such income in the next year, and if I don't receive that income, then that will be a direct loss to me. Since I have already recorded that I will receive this amount of income, but I don't receive that, so it will be a direct loss to me, and such loss will be suffered by my business. So it is better not to record such income against which I don't have any full amount of certainty that I will be receiving that. But in case of loss, even if I have doubt that I may be suffering this loss, I'll record that, because if I record that loss, and even in the case that the loss does not took place, we don't need to suffer loss, then there is no issue, because a loss has been avoided. So avoiding a loss is also equivalent to having a profit if we avoid a loss. So better to record all possible losses in accounts, but Incomes and revenues must not be recorded until and unless we have full certainty of receiving them. So this is called prudence concept or prudence principle. These accounting principles are also called accounting concepts. There are a few more concepts like full disclosure concept. All the details and all the principles and techniques of accounts used must be disclosed. Also, there are a few more concept, realization concept and all. So those are not so important. So whatever important I have already told you. Now I want